Hi, guys, and happy Monday. I hope all of you had a great weekend, got some rest, got to get outside and do something fun, and came back to this week refreshed and ready to trade. I wanted to go over a couple of the trades that we talked about this in the weekend update, as well as some of the positions I'm currently holding still, and some positions that I was looking at last week for potential trades based on technical breaks and things of that nature. Those were some of the earnings trades that we looked at from last week, and we were looking for some continuation or other technical type of moves. So I want to start out just kind of reviewing the overall market condition again. So we talked over the weekend about this island reversal pattern in the SPX, which is the S&P 500 cash. So this here continues to be an island reversal pattern. This today's action did not breach into the gap too much. It did get in there a little bit, but it did not breach into the gap. Into this, it did not close the gap, rather, into the island pattern up here. It did kind of peek into the gap a little bit by maybe like a one and a half point, but I think it reversed quickly off of that. So you can see right here the quick reversal off of that little piercing into the gap, rejection, and it kind of had a strong down move today. So, because of the movement in the morning, we talked a little bit about some of the trades from the weekend were short trades. So actually all of them that I talked about as potential swing trades that were not earnings related were on the short side. So what I'd said is make sure that the market is going in the direction that your trade is going to go into. For example, if you're putting on a short position, you want the market to be relatively neutral to short, to bearish rather. You don't want the market to be just screaming to the upside when you're trying to put a short position on. It just, we talked about the trend being your friend and all that. So this morning, the stock market in general showed some pretty good relative strength early on. So as a result, I did not take any of those positions right away because they were all short positions, and I didn't want to get caught in a, kind of a bad situation. That plus the fact that if you take a look at the NASDAQ, the NASDAQ showed just incredible strength this morning in the first, 2 hours of, I guess, about hour of the day. It showed just total. Amazon was hitting new highs. Apple hit new highs. It was very, very strong action. There weren't that many stocks that were on the downside in the NASDAQ. And because of this strong action in the NASDAQ, I wanted to make sure that I waited for some weakness prior to taking any trades, which is actually, caused me to miss a couple, which is okay. But, it also caused me to be a little bit just more cautious. And I'm okay with losing a few points based on just being more conservative with my entries. And that's what happened. So you can see here the NASDAQ, it actually was so strong that it closed its gap. So it had a little island reversal here as well. But you see this big old spike closed the gap right here. But it failed, and came right back down. So that's actually, some bearish action. So around the middle part of the morning, as the market began to turn over, I got a little bit more confident about taking some short trades, like around, this area once it totally reversed the pattern from the morning. So we'll talk about some of the trades that I got into today, and also some trades from last week that I was holding. And we'll just get into the details now. So first, a couple of trades that we talked about last week that were earnings trades, but we still wanted to look at them for longer term swing trades after the initial earnings momentum was over. So the first stock there is Planet Fitness. This stock we talked about couple of, on the day of earnings, and then of course the day after we also kind of looked at it. But if you look at Planet Fitness, we really, my assumption on Planet Fitness was that it would be weak because this stock is has just had an incredibly bullish move over the course of the past couple of years. I mean, it's just parabolic almost. And for a fitness center, it just didn't seem like a very reasonable valuation. I mean, the stock's valuation has just, inflated based on this move in the stock over the past couple of years. So on earnings, which were back here, I believe on Thursday night, my thought was on Friday that I would wait until it breached this trend line here, which is a longer term trend line in the stock that was over the course of the past 2 years. And my thought was that it would breach this trend line and I would trade it to the short side. I would fade that trend line. So it didn't do that. It did not breach the trend line. So there was no trade on Planet Fitness on Friday. But what I said was I was going to keep watching it. It made lower highs that day. It also, just had some not so strong action. Pretty big doji on the chart too in the candlestick patterns. So my trade was going to be same thing. I was, what I had said in my video, I believe on Friday, was that if it crossed below this trend line on Monday or Tuesday or Wednesday, whenever that was, I was going to take a short position on Planet Fitness, and my stop was going to be, or my covering point rather, was going to be at this pivot at 49.71 with, the next resistance down here at the trend line or at this 47.51 pivot, next support rather, not resistance, the next support level. So I was looking to fade any move below the trend line. So you can see today actually it had a pretty big gap, a little gap underneath the trend line. It opened up under the trend line and just at the low of Friday this morning. So what do I do when a gap happens? I wait for the first 5 or 1 minute bar, and I make my trade after at the low or high of that first 5 minute or 1 minute bar based on the action of the stock. So with Planet Fitness, that was a 1 minute bar. So the first 1 minute bar traded right here. It went up a little bit and then came right back down and through the low, which is right here at the about $50.50 level, and then kind of cracked down below there all the way down to that 49.71 pivot that we had talked about. Found some support around there and then bounced back up. I actually traded this stock to the short side right here underneath the first 1 minute low. And I did hold it because I traded an option, not a stock. So I held it throughout the day through this movement back up to the upside. I was a little nervous there for a second, but my stop was at the high of the day, which is where I put my stop. If I trade the first 5 minute or 15 minute high or low, my stop is that bar, high or low. So the first 5 minute bar was, the high was 51, I believe, 50.98 or 51, whatever the high today is. So that was my stop. It never went back and hit that, so I never got stopped out. And the stock continued to really show some weakness and accelerate the weakness going into the close. Because of this acceleration of weakness, I did not sell my position sell my put position here, and decided to hold it for another day at least to see the action tomorrow. So my stop on this position will be this 49.71 line. I'm going to pull my stop down and lock in this kind of profit right here. And considering it did act as a little bit of resistance, I'll put my stop just above it at 49.75. So that's where my mental stop is on the stock, at 49.75-ish. So if it doesn't breach that, I'll hold the option for the next day or so, depending on the stock's action. And my next support level or my target will be this trend line, the shorter term uptrend line here, or the 47.50 pivot. They're about at the same level right now. So those are what I'm looking for Planet Fitness. So that actually turned out to be a good trade to hold, to keep following, because it really showed that same weakness that I thought it would show on the day of earnings. It just, took a day for that to materialize. So it worked out really well. And it was actually helped today by a few downgrades on valuation. You can see the news right here. First article, JP Morgan downgrades Planet Fitness based on valuation. And it's just what we were talking about last week. So it worked out pretty well. Next up is Booking.com. This stock also on earnings, we wanted to fade it to the downside off of any rally or rejection of this trend line. On the day of earnings, it actually did not do that. So there was no real trade on the day of earnings. I did trade it, as I have said before, but I got stopped out pretty quickly. And then I decided not to trade it again because I did not actually follow my rules, which is to wait for that first 5-minute high or 15-minute high. So, or low rather, to trade it. So you can see here, the day of earnings, it actually went right into that gap here, this big old gap, which is in gray. And it is a big gap. It's between 1997 there and all the way down here to 1920. So that's a pretty big gap. So it just continued to, bounce really, and grind higher off of the lows down here at 1800. I mean, that was a huge spike low off the earnings, and it just found some strength and just continued to kind of grind higher throughout the day. So what I was looking for was for a reversal underneath the trend line and continued weakness. It did, stay below that gap on Friday, and I did have a trade on it on Friday, but I got out of that trade at the end of the day. So I've already made a small trade on Friday in at about 1905 or 6, and out over here, I believe around 1895, 1896. I can't recall the exact numbers, and you can't see it on this 15-minute chart. But I did take a small trade on it on Friday. Today, with the strength in the market, I didn't actually have Booking on my radar for some reason. My alerts were off on it or something, but it didn't show up at all until like midday. And just take a look at this chart compared to the market's action, right? So the NASDAQ was so strong this morning, and this stock didn't do anything. It just kind of hung around right here in a basing pattern, consolidating, didn't do a thing. Did not spike up like every other chart. I mean, take a look at, like, here's Apple. Here's, Amazon. I mean, this is what the NASDAQ was doing this morning, and Booking did nothing but sit around and base all day. I did not see that, totally missed it. But around midday, my alert for this stock, I had an alert, I think right around this trend line level, and it did go off. And so I managed to see that the stock was cracking down through the trend line that we had talked about last week, this trend line here. So as it started going through that trend line, I didn't get it right at the crossover, but I did, it had this little consolidation period, so I wanted to wait till it kind of rolled back over. And as it rolled over into this downtrend, or below this last green bar here, that's where I actually got in with I bought an at the money put option in September for this. The reason being, I didn't want to get too far deep in the money just because of the pricing of the options on this, $1,900, $1,850 dollar stock. So I tried to reduce my risk by just buying an at the money put option, and that will still move if the stock has some quick movement. So it still will give me the action that I want, but just not as much. So it's okay with me to reduce my risk. I will accept a little bit of a reduced profit, and that's totally fine. So here's my entry. You can see the action it had towards the end of the day. It's looking good for a continuation on the downside. My targets for Booking.com are 1836 and 1826, which are pivots, as you can see, from back here in February, and then the gap right here in February. So you can see this little gap right here. You have 1836 as the top of the gap, and then 1826 as the bottom. So that's why those two are my pivots. And if you take a look a little bit longer term, my other targets, as we talked about before, are down here at the 1732 level, and then a 1714. These two pivots here. And longer term, which I don't think is going to happen right away, but if it does, that would be incredible. But here are some longer term targets: 1630, and this purple line, which is another pivot. And this purple line is a complex trend line, which goes all the way back like several years, so 2014. And so that is the ultimate like goal, I think, for this stock long term in my mind, is that it probably will. It might take some churning to get there, but I think it rolls over till about the 1700 level. That's about where I think my long-term target is. So whether that means, fits, a little bit of up and down action there, or it means a straight down action, that's where my target is. So that's Priceline, or rather the old Priceline, but Booking.com. And it's looking very good today, and I hope that these targets hold up and I can get a good profit. My stop on Booking, just so that you all know, will be this trend line. So I'm willing to take this little risk here for this potential larger term reward. So that is my stop. I will also sell probably sell my option down here if it fills this gap, because that gaps usually act as some support. So I'll probably look to sell my position here, and then wait for the next opportunity to fade the stock to the downside. Hopefully some consolidation, and then another fade to the down. So that's Booking. Lastly, of the earnings stocks that we were looking at last week, is Dropbox. Dropbox we looked at for actually a fade as well off of earnings. We didn't get that trade on earnings day. This is, we were looking for it to stay below this downward trend line, and it actually never got back up to it. So what I thought it would do after earnings, this is earnings, the evening of earnings, you see it like the action is crazy. It had a huge green bar the day before earnings were reported. So the day of earnings were reported after the bell. So this day here, which is August 9th, Thursday, what a huge day that was. I mean, it went, from 31.69 all the way to 34, and then in the after hours to 37.12, and just spiked up there and just crashed hard all the way back down, to in the 30s. What my hypothesis here, or for DBX, was that it would kind of grind up a little bit back towards that trend line, and then roll over, and give an opportunity to fade. But it actually just did that in the pre-market. It did not ever get back up to those levels in the regular trading hours on Friday. So no trade on Dropbox on Friday, but I was going to watch it into Monday. And you can see today it actually had some incredibly bearish action, and we were able to capitalize on that. So I'm going to go ahead and put it on a 5-minute chart here so you can see what Dropbox did. And again, I was just looking for a either, it could have consolidated up to that line and then rolled over, but it just decided to go straight for it. So as it showed weakness this morning, I took a look and wanted to short it underneath the prior day's low, which was 30.81, and that is where I got in the stock on the short side. And I am still holding this stock, on the short side. My stop is going to be at the 30.22 level right here, which is about half of this move. So I've moved my stop down to this 30.22 level. Today, my stop was, as usual, the high of the day. And so the stop is being moved down to this 30.22 level going into tomorrow. Some targets on Dropbox. You can see down here, this pivot at 28.80 is a good place to take some profits. And then again, you have some areas down here of support at the 2774 level and the 2661 level, which is the all-time low. So also you can look at this Fibonacci that I put on, which is the move from today. You could use this extension level as a potential target, or maybe an area of support, and this one as well. So because this stock is pretty new, I mean, it's IPO'd pretty recently, it doesn't really have too many indicators, and it's been so messy. You just have to keep your stops tight and, just go with whatever the chart is showing you with respect to support and resistance levels. So that's where Dropbox is, and we're continuing to hold that into tomorrow as well. The few stocks that I did mention over the weekend as swing trades, which didn't have anything to do with earnings, they were there. I think there were about 4 stocks that we talked about. The first one was Chubb. I'm not going to go through all 4 of them. I'm going to go through the 2 that I traded. I will just list out the stocks. It's Chubb, Pepsi, PNC Bank, and Prudential. So those were the 4 stocks we talked about on the on the short side for short trades, based on their patterns and based on the swing trade setups. So Chubb, you can see here, the setup was to sell it at the low, below the low of Friday, because it was below its 20-day moving average, and it has a kind of a longer term downtrend and a couple of lower highs here. So my setup is the first day that it closes below the 20-day moving average, I just keep a look at that to see if it does get below there, and that will be my entry point. So that's what it did today. And at the beginning of the day, actually, I took this trade early on in the day because it was showing some weakness, even though the market was showing some strength. I went ahead and bought a put option right here at this level, which was the low of the prior day, around 135-ish. Yeah, 135.35. So that's where I bought a put option. You see it kind of rallied, and it made me a little nervous, but my stop is, as we talked about on Wednesday, my stop is the 20-day moving average or the high of yesterday on this swing trade, because it's not a earnings trade. It's not like a quick mover. I give myself a little wiggle room in these swing trades by using the prior day's high. So it didn't get close to that, didn't have any worry about it getting stopped out. So just held on to it, and it did roll over with the market at the rest, middle part of the day, and is actually just kind of consolidated towards the end of the day in this range. I do notice there's some action to the downside after hours, which, hey, that's good for me. It's at least 50 cents to the downside more after hours with no real news that I can see. So that's Chubb. I will continue to hold Chubb. The option, my target is in this area here in the 131.90 area, and then 131.52 is the next level. There's a lot of, you can see here on the daily, there's a little bit of congestion here. This looked like a V pattern, cup and handle. We talked about this. So I will be looking, just keeping a close eye on this and trailing my stops down, mental stops anyway, just continue to bring my stops down to appropriate levels, each day's high. So like tomorrow, my stop will be above today's high, 135.94, and then so on. So that's Chubb. Next is PNC. We also took this trade today, and PNC was also an interesting trade today. It worked out really well. We talked about this one. Same setup, a long-term downtrend, lower highs, and then a close below the 20-day moving average. This stock, the high of the prior day was 144.17. It did not get to 144.17. You can see the high is 144.12. And 144.17 was where my alert was set for the high of the prior day. So it did never cross into this gap here that it made yesterday, and in fact ended up failing down, past the support of 142.76 pivot, and continued on from there. This stock was pretty strong in the morning, so there was really no trade on it. I didn't trade it until it came back all the way down to this pivot point of 142.76, and had a trade here. You can see that it did kind of curl back up and hit this the 50 moving average on the 5-minute chart, and then it did roll back over to the downside. So good trade overall. If you were aggressive, you could have traded this bar here, which is a pivot point, swing pivot on a intraday chart, and you could have made that trade and gotten this as well. But I'm pretty conservative in my trades, so I waited until it came back down below this 142.76 low from yesterday, Friday rather, and then made my trade. So I'm holding PNC. Next target 140.19, and my stop, actually I will pull it down since this day was a pretty big range. I'm pulling my stop over here to the 143 level, actually whatever the top of that swing high is, 143 exactly. So that will be my stop going into tomorrow. Next target, I'll actually be looking at about 140 because it's a psychological level. And also we have a couple of pivots right here as well at 140.19. So that's what I'll be focusing on for my next target on this stock, and we will keep an eye on it. Okay. I'm currently still holding 2 positions from last week. If you recall, that's Zillow and GDX, which is the gold miners. So we'll start with GDX. GDX has had a pretty big move down today, 2.82%. And it actually, is still just weak because the dollar's been strong. The Turkish lira has been really weak. There's a flight to safety into gold and other currencies that are non-US dollars. The yen's shown a little bit of tiny strength too. So you can see here that GDX has made a good move to the downside today. I actually am still in my position, even though it did have a little bounce here. And I'm going to pull my stop down to this 50% fib level from today. So because it did gap down, right? So it gapped down today. So this gap, I don't want it to be breached, obviously, but this is such a huge range. I mean, 2.82% is pretty a large range. So I just threw a Fibonacci retracement on this bar here today, on the move today. And so I will keep my stop at 2015, which is the 50% Fibonacci level. If it does start going, if this doesn't act as resistance, if it just kind of goes through it. So that's what I'll be looking for into tomorrow on GDX. And, my levels of, my target levels rather, as you know, is 1854 is my first target on GDX, and I'll be looking for it to get there. And I'll just be trailing my stops down. And that's kind of what my next moves are in GDX. So moving on to Zillow. Zillow was, as you guys know, I was holding this long actually for a bounce from earnings. So I actually bought an option on the day after earnings as it crossed over the high of the day and into this little gap. And I knew about this 5106 resistance level, which is a pivot, as well as 5205, which was also an overnight pivot. So I was actually expecting a little bit more strength in this, and then for it to roll over perhaps a few days down the road. Longer term, my goal was that or expectation, not goal, was that Zillow would break below this longer term trend line. If you take a look at the weekly, it's a pretty big trend line that extends all the way down to 2015, all the way back to 2015. So my expectation for this stock was that it would kind of eventually get below this trend line, and that I would trade it to the downside or fade it at that point. Unfortunately, the bounce didn't work so well, and I didn't sell it when I should have, which was on Thursday. On this move here, because it didn't really get to that high, even though it did have a hammer pattern, and it still bounced up against this resistance, and it didn't really act very well. So I probably should have sold it and I had a little profit in it then. Friday's move, what I decided to do was that, obviously I held it on Friday as well, and said that if it did, if the stock moved below the low of Friday, that I would sell out of my long position and get short. And that's exactly what I did. So you can see here, this is today's chart on Zillow. Let me go ahead and do a 2-day 15-minute so you can see a little bit better. So here is the action today. It did go right down below the trend line very early on, which is when I sold my long position. I waited for a little pullback up or pullback into the into this resistance here at 48.45, and also the trend line. And I waited for the next rollover down through the trend line, and got in the position right here at the, I think it's like a around $48 to the short side. Yeah, yep. So at this rollover right here, that's when I got back into it. I waited for the break and then a little pull, a little bit of a pull back to the trend line and then roll back over for me to get in. So I'm pretty conservative with my entry there. Still holding it. Some targets. These have been discussed before, but I'll repeat them. 46.30 is my first target. 45.78 is my second, and these are pivots from prior lows here. And then, there is a longer term pivot of 38.60 that I'm looking at for it to get to over the long term. So that's, you have all this little congestion in here, and you could potentially say, yep, this 43 area would be an area that you want to look at. And I will be looking at it. I don't think it's going to go straight down. I think it will have, some areas of consolidation. So, I'm looking at Zillow as a longer term downtrend. It's starting a longer term downtrend right now, potentially, into the area in the 30s. That's what I'm looking at. I mean, it's broken this long term trend line, so it may just consolidate around here for a while, but I expect that it will go into this window here somewhere, wherever that might be. I can't predict anything, but that's what my thought is. So that's Zillow, and that actually we're obviously still holding that position, and we'll continue to follow it as well. Some ideas. I did actually make a trade today that I was given by my dad. Actually, it's a stock that we did look at for earnings, and I did not trade it on earnings because it did nothing at all that I thought it would do. But it's good that he brought this back to my attention today, because this was my actual, this is what my expectation was for Zillow anyway. I mean, for Yelp anyway. I didn't really think Yelp was a strong stock. I was very surprised to see the action on the earnings. It went, through this longer term downtrend line, as well as this pivot at 48.40, which you can see has multiple touches over the course of the past year. And it just blew through it, and I wasn't expecting it, so I didn't trade it. My trade was going to be if after it hit 48.40 or crossed it, I wanted to trade it to fade it to the downside, but it went straight through it. Ended up just closing right there, and the next day it continued up as well. So there was no real trade for me. But you can see, and what my dad pointed out to me was this little intraday head and shoulders pattern that it had on Friday. So based on that pattern, his trade was to short Yelp off the open, and just play it down to the trend line itself. So back down to the trend line, for which, since it's now been broken, it should act as a support. So I, being quite conservative, and being that the market was so strong this morning, and decided to wait until it crossed back below the 48.40 pivot, and then I got in the position. So I am short Yelp right here at the 48.34 level, and it has come down quite a bit from there, and my target is going to be this trend line. But I, because of the strong move, I will be watching I just went ahead and threw a Fibonacci on it from the earnings day, low to high after earnings. And so the 50% retracement of that was right here at 47.40. It went below it, and it's actually acted as a little bit of resistance now. So I will probably utilize this as my support level, or rather my stop level, this 50% fib, and then we'll just keep looking for a little down move to the 61.8, and use that as a level of support and a target. And then if it goes through 61.8, my ultimate target is this trend line. So that's Yelp. It actually turned out to be a cool trade. And I was really happy that my dad reminded me about it, because it was off my radar today. So that's one. And it could be a continuation trade. You can look to, if you want to get into this trade, look for a little pullback up to the 50% fib. And if it rolls back over, it could be a short-term down trade as well. But really the trade was at the breach of this 48.40 pivot. But if you're looking for longer term, I mean, this is a good secure high here at 51.33 with these two bars on either side below it. So that's Yelp. The next stock I want to talk about is Twitter. This is another stock that had earnings back on this 27th of July. It had some pretty bad earnings, and fell quite hard through this trend line here and stopped at this level, which is 31.03, and kind of consolidated. So we drew a trend line from back here, from this low to the low of the day after earnings, and so it's kind of been hugging this trend line so far since earnings. So it's just kind of been consolidating right around here. And while this could be considered a bear flag, because it kind of makes a little H pattern, it's hard to see here, but an H pattern is like a really strong move to the downside, followed by a retracement and a rounded, like a little rounded top. So it looks a little bit like an H, but it never, I mean, the price action never breaches this initial left side of the H, I guess you would say. So based on this pattern, that's usually that's a pattern that's usually harder to get down, and go short. The stock, usually the price action finds it hard to get down below this little H pattern. Usually it's just some technical analysis, and it's just a formation that's usually harder to go down from. So today, Twitter had some pretty good news in that it was upgraded by Citron Research, and had a good bounce here. With obviously the Nasdaq was pretty strong too, so it had a bounce and then consolidated and had another move really high to this pivot here from the 7th of August, which is kind of in the middle of this H pattern, and then it kind of dropped down a little bit towards the end of the day with the rest of the market. It was quite weak. So what I'm going to be looking for in Twitter is a move above this pivot line here. So above this pivot, which, let's see what the high is here, 33.61. So 33.61 will be the pivot that I utilize as my line in the sand over which I will be long this position. And so I'm looking for a long position, and just a very short-term trade. Of course, it's a swing trade. So I expect that it could get all the way up to here, maybe, but I anticipate it might have some resistance at this trend line. So what I'm going to do, instead of just buying the stock outright or buying a call outright, I plan on selling a spread. So I'm going to sell a put spread underneath this action. So I'll probably sell a 31 or 30, and then go down. So I'll probably sell a 40 delta and a 10 delta put spread, something like that. I'll have to take a look at what it looks like based on the action once it moves above there. But let me just show you what I'm talking about here. So here's Twitter. So a 40 delta would be right here, like 32.50, and a 10 delta is, you could use this 11, so that will be at 30. So that would be kind of what it looked like. It would look like something like that. As it goes above, as it gets higher, that and goes above the 3361 level, those prices will change, and those strike prices will be different. So I'll stick to about a 40-10 delta put spread, and that takes advantage of time. So basically, I think my expectation and theory for this trade is that the stock won't get back below this 31 level here, and not right away. So it's going to be a shorter term, 2-week option spread. And so in that 2 weeks, I'll be looking for the time value of that option, or the extrinsic value of that option to deteriorate. And then I should collect the credit. I will collect the credit if it stays above 31. So that's what I'll be looking for. It's a conservative play, but it limits your risk, and also allows you to, it doesn't take a directional, it doesn't use any kind of a directional hypothesis, right? So there's no, I don't think it's going to necessarily, the stock doesn't have to go up. It just has to stay where it is. It could stay right where it is all the way till my option expires, my spread expires, and I would still make my full profit. So I don't have any expectation that the stock's going to go like rocketing higher. The stock doesn't have to go rocketing higher for me to make money. But it's a really good pattern. And I'm just, my theory is that it's not going to go below 31. So that is for the short term. So that is, that's what it is. So if it does breach below the 31 level, I will buy back my credit spread and get out of the position. So that's what I'm looking for in Twitter. And those are the ideas that I have for next week, or for this week rather. I mean, obviously we still have the Chubb and PNC, which look good and could be continuation trades even if you want to get into them tomorrow. Pepsi and Prudential are still options. They didn't look very good today. Like Pepsi is still kind of showing some strength here, but it did close underneath this 113.05 pivot. So that's what we looked for. We were looking for it to stay below 113.05 and to roll back over and get down into this area of target one was around 110.97. So potentially, if it got below, I'm going to remove this arrow. I don't know why that's there. So if it gets below the low of today, which is, let's see, 112.01, you could potentially trade it to the downside for like $1, or even the 110 pivot, which was my second target, about 110, 109, and then down to 107.52. I mean, if it gets below this hammer pattern right here, that's a pretty good trade. It didn't get back above the 113.05 pivot. It's still below the 20-day moving average. So that's a good option for the rest of the week you could take a look at. And also Prudential, still, I mean, I didn't trade this, but I mean, you can see it has kind of just consolidated today. It did go down, I mean, 0.5%, just like the market, but you could look to trade it below the low of today for $1, or down here to the 93 pivot. I mean, this is a little messy chart, which is what I was telling you the other day. It's quite messy. So you have to kind of give it some wiggle room. And it did already have a pretty big down move, which is why I didn't trade it today. But I think Pepsi looks better than this. So I would say avoid Prudential unless it looks really good. But Pepsi could be a good setup below today's low. And that's all I have for you today. I will be going over some earnings trades in a separate video. There are companies reporting earnings today that we were going to look at, as well as Wednesday and Thursday. So I'll put the earnings trades, which will be trades for tomorrow, in a separate video and share that with you all later. So thanks for watching. If you are interested in getting any alerts when I put more videos up, please subscribe to my channel. And thanks again, and have a great week, and happy trading.